Hello everyone and welcome to today's video. Is scalping futures a sustainable trading strategy is our topic today. So what is it? Scalping is a trading strategy that involves capturing profits from small price movements, as small as 1 to a few ticks. In order to make a profit, you often have to execute a substantial amount of trades a day. It isn't uncommon for scalpers to make anywhere from 10 to 100 trades a day, as each individual scalp trade typically generates a minuscule profit. Before we get into how I set up my depth of market and charts to be able to scalp, I want to go over some of the drawbacks that you might incur when you do scalp. Since you must carry out a large number of trades, the transaction costs and fees and commissions can eat up a lot of your gains. Considering that trading volume and liquidity may differ from minute to minute, you can never predict when price slippage will shave a tick or two from your entry points, reducing your profits or adding to your losses. In fast-moving markets, you have to execute trades at lightning speed, an exceedingly stressful task if you don't have the luxury to take regular breaks. And last but not least, when you make a series of decisions in a context wherein real money is at stake, you may be prone to making more errors in thinking and execution. And that's a big one. When it comes to scalping, I used to scalp for a firm in Chicago, and we would typically do 100 trades a day, and it was mentally exhausting. This was also when there was a lot more edge with electronic trading, and the market would trade back and forth, and there weren't as many black box trading firms in the market. But one way that I set up my dome, and I always trade on the depth of market for scalping, and we'll get into some of the details as to why. But if you don't have your dome set up, there's a quick button up here on Optimus Flow. Click on Dome Trader, and it'll pull up a price ticket. We can choose our market. I always look at the S&P Mini. Double click that, and in our other videos, we've said that this is not the standard view. I've edited this to look like Trading Technologies ticket. That's just how I started trading, so I mimicked that. But once you get the depth of market up, there's one thing that I like to do in here. I right click anywhere here on the depth of market, go to settings, and I want to make sure my refresh rate is down. Normally I think this setting is, let's say 250, and you can see the difference here. When I apply it, you can see this slows down a little bit, and it doesn't, I think there's some information slippage. When that happens, you don't see all the orders because it's not coming in as quickly as the orders are coming into the market. So I like to have this set at 5 milliseconds. In our last video, when we discussed stop loss techniques, that is something that I use when I scalp. I utilize the automatic stop loss and the automatic take profit. And the reason for that is because with scalping being so fast and high frequency, I want to make sure that when I put my orders in, I already have a stop loss in place and a profit target in place. A lot of the times when you're scalping, depending on your trading style and technique and how many points you're going for in a trade, it can go very fast. So I just want to make sure that it automatically is putting my stop loss in and my take profit. And then when I do that, I can always move these after the fact or when I'm in a trade. And again, this is just a demo account for educational purposes. So I got into a trade. My stop loss is already in place, take profits here already. And again, to activate that, we're just going to click on here, make sure this is activated, and make sure the take profit is activated. So that was a quick trade, nice little scalp right at the open. But typically when you're scalping, that is a very common trade. That was about 3 points, nice and quick, in and out. The caveat to that is, as a scalper, you can be making a lot of those trades throughout the day, and it can get mentally exhausting, fatiguing. So I would say common breaks are important, and making sure that you're keeping a baseline throughout the day and not getting too fatigued. So going into scalping the S&P Mini, one tick is $12.50 on a one lot, which means 1 point is about $50. It is $50. It's not about, it's exactly $50. And I would say that once you have found a trading strategy for scalping, you need to diligently backtest it over hundreds of trades in order to better understand the average win rate and average reward to risk ratio that generates across different historical periods. Only then can you devise the right money management strategy suitable for your technical strategy based on your risk tolerance and trading goals. The other chart that I utilize a lot with scalping is the footprint chart. You have probably seen this in my other videos on how to set it up, so we won't go into that too much on how to set it up. But the footprint chart allows me to really identify levels of support and resistance in conjunction with a typical candlestick chart. Scalping used to be very different. It's changed a lot throughout the years. When electronic trading came about after pit trading, this looked very different. When I started trading in the early 2000s, there were a lot more contracts on the bid and the offer. What has changed over time is black box trading and algorithmic trading. So the level 2 data that we see here on these bids and offers is not exactly what is available, because we have what's called iceberg orders. So black box trading firms will come in and say they want to unload, let's say 2,000 here at 71, but they're only going to bid a certain amount, and then they'll reload that offer. So the advantage back in the day, during the pit especially, was that traders could hear the orders coming into the market and they would see everything that's available. Today we don't have that luxury, so we're not going to see all the orders that are available on the bid and the offer, because you just can't see it. Those are programs that are going to reload on the bid and the offer throughout the day, all the time, and we just don't have that type of information available. So it's gotten definitely more competitive in terms of scalping, and I think that's changed how scalping is done. When we were scalping in the early 2000s, it was for a tick or two. Take a few trades, you're up 2-3 ticks on each trade, and you do that 50, 100 times a day, and that was your day. I don't think that type of strategy is sustainable anymore. And I don't even think that it's a good strategy anymore. The market is trading, well, the market is providing more opportunity in terms of how quickly and how far it moves now. And whatever your scalping strategy is, I think that it's important to look at the market and how it's trading now, and really take a look at what's available. When I scalp and identify these areas that I do want to participate in, I'm really just looking at price action, support and resistance, ranges. There would be, I don't, in my opinion, there's not really a good indicator that I would be using solely for scalping. Now I use indicators for scalping, but that's in conjunction with these short movements. So again, I would say that the best strategy that you're going to have is one that's your own, one that you have back tested, and keeping realistic expectations in terms of movement and price targets. So here, right after the open, we have identified a small range right here, and we have peaked out above it. And that was a good example of some latency with the amount of market volume coming in. I made a click, and it took about a couple seconds to place it. That is standard. With scalping, it's high frequency. There's going to be latency sometimes, and that's the challenge. One of the challenges that you're going to experience with scalping is just that latency. And the black box traders that are near the exchanges, they're going to have faster execution. They're closer to the exchanges, so they're always going to get filled faster than you are. But let's see how this one goes. And on our 15-minute chart, the next high is up here at 93. And then what I like to do on my footprint chart is to look at when it does pop above here, what is happening with these orders that are coming in? Are these offers coming off price, or do they want to get filled with that liquidity that popped up? And obviously it came up. There was a decent spike in volume. There was some sellers up here, but now it's starting to move back down. And in conjunction with our video that we did last week on stop loss techniques, we can see that when I activate visual trading and show my positions, and I want to activate my orders so I can see my stop loss. So my stop loss is here at the top of the previous range. And it's a decent spot. Again, with scalping, I typically, as soon as it goes into profit, I'm moving my stop because it's so fast and I don't want to carry too much risk throughout the trade. I'm typically looking for quick movements, those higher volatility areas where it's going to move towards my price target and really not look back. So I might just click and drag my stop up here, put it into a 2-tick profit. And at this point, we have a risk-free trade. Do this on the 1 minute. We can see so now you can see that my stop has moved above my entry, and I can also click and drag my stop on the 1 minute chart here, and that's going to move it in the depth of market as well. And again, this is just an example trade for educational purposes only. But it is not uncommon when you're scalping to, again, only be holding these trades for a few minutes, trading when it's most volatile, and just looking to get in and out of the market. And if I wanted to get out of the position, I could either drag my profit down here, try to get filled, and then we're out. So that trade was only a minute and a half, 2 minutes at most, and then we're just sitting and waiting for the next opportunity. But this is the best way, in my opinion, to execute your trades within a scalping strategy, is to place your orders in the depth of market. You have a lot of flexibility. If you bid and then you don't want that price, you can right click and it'll just exit the order, cancel everything. But it is definitely more high frequency than your swing trading or longer term trading strategies. So that is all I have for you today on scalping. I hope you enjoyed the video. If you have any other questions, please visit us at optimusfutures.com. Thank you.